All right. Thanks everybody for this panel. My name is Jürgen Weiss, and I'm introducing our panelists already today. So we have Yamini Bhatt, the CEO and the co-founder of Vymo. We have Peter Kemps, principal from Sequoia, and we have Al Nuramji, the Group Chief Digital Officer of Prudential. We have seen in our research a huge rise in interest in digital capabilities. So when we look at our research, for instance, our clients tell us that about 87% of them significantly did increase their investments in digital channel capabilities. We also know from our research that about 77% of financial services organizations are investing in new products and new service capabilities. So let's turn to Yamini for the first question. How do you see customers changing, maybe also as a consequence of the pandemic, but also from a mid and a longer term perspective in the financial services industry?
Yeah, thank you so much, Jürgen. So we work across 7 countries with more than 60 insurers. So this perspective kind of comes from markets like US, Japan, as well as many Southeast Asian countries. We've seen 2 predominant trends, and this is even outside of the pandemic. The pandemic only turned to exacerbate some of these trends. One is that when someone is looking for a very specific quick decision need as a consumer or a customer, they are switching more and more to options where they can compare and buy either a single product bundled with something else they're buying, or very quickly compare and buy, right? So customers are getting very used to a digital purchase experience because it gives speed, it gives transparency, and so on. Now, because of this, what we have noticed is even in the case of complex products, there is 2 things that they start looking for. One is the need for speed and responsiveness from an insurer doesn't change in spite of the sale being complex and much more highly involved, right? And despite the pandemic, we saw simple trends like incoming leads on products like life insurance saw about 22% conversion when responded to on the same day, whereas the second day, the conversion rate was just 4%, right? But because of the pandemic, almost 87% of leads did not get touched on the same day. And that's the pandemic again made it worse for institutions to be able to be responsive, but it did not change the behavior of customers. Second big trend we have noticed is because there is a plethora of D2C options, when customers do try and dig more into solutions that can better suit their more complex needs, what they're looking for is not salespeople, but they're looking for trusted advisors. Someone who can understand their core needs more from an end-to-end point of view, not just on, say, a term insurance or a life insurance policy or a retirement plan, but how do you balance risk, wealth, investments? How do you balance retirement? How do you think of legacy, so on and so forth? And how does that make your portfolio look, right? So a much broader understanding of customers' needs and being able to position your products or services in context of that is what the trusted advisor relationship is about. And that's what is becoming way more critical for insurers to front end.
All right, thanks, Yamini. Peter, as an investor and as a venture capitalist, what are you seeing a little bit going on in the sense of customer experience in the financial services industry?
Listen, I think in general, as an investor, I work across many different industries and categories, and some of them are financial services and some are not. And within financial services, some are insurance and some are not. And I think what you see in general, and maybe it's a bit more of a 50,000 feet view, but I think this massive change in customer expectations, right? We're all used to Amazon same-day delivery. We're all used to Uber. We're all used to Netflix. And so customers have come just to experience and expect something completely different. And that is okay with low friction products. But what you obviously see with insurance is that it tends to be much more of a high friction product. And so when we started looking at insurance much more actively and proactively, one of the initial things that we've noticed was that most of the InsureTech players that we saw in the beginning, let's say the first wave, were all doing only one thing, which is trying to take distribution from offline to online, right? And and trying to take friction out of that. But frankly, many of those are, and maybe it sounds weird, but it's what I call a sneaker business. And why we call it a sneaker business, it's actually something I learned from a colleague of mine. We were actually chatting about a video business, and he asked me, "What is it, a sneaker business?" And I said, "What do you mean?" Well, in the first .com cycle, there were a lot of businesses that they said they were internet businesses, but what happened is, you would put something on the front end, you would put something online, but at the back end, you would print it out, you would put on your sneakers, and when you would run to your partner or your distributor, you would give it, and they would like double key it into their system, right? And so we saw a lot of these insurance businesses that were like that, sneaker businesses, right? I could put in my stuff, and then a lead would roll out at the end, and then there would be a lead going, etc. So there was still a lot of friction, and it was slow, and it was inaccurate. And those businesses were not very attractive in many cases because it becomes this massive CAC versus LTV play, right? Can I acquire customers? Can I bombard them with smarter SEO, SEM, etc., and then give leads? And that's just a very narrow view. And fortunately, and I'm sure we'll talk about that later, fortunately, we see very different type of insurance companies use technologies in different ways. And we'll talk about that. But that first wave, I think, is not enough. There was some value in it. But I think as an insurance industry overall, we need to look at much deeper and better things and more end-to-end technology to remove that friction and make insurance an easier product to buy and consume.
Thank you. Alnur, as CDO of Prudential, what's your view on the customer experience changes?
Look, I think it's led us to down two paths. One is we're already on a path, thankfully, to digitalize, I think is the expression, the whole business anyway. But what is certainly accelerated, as Peter and Yamini said, in many ways, to try and understand right from the beginning how you attract customers, because this is I think Peter called it a high friction thing. It's not so much high friction as little understood, especially today's consumers don't really get the word insurance, right? So why do they need it? Usually it's developed by a face-to-face conversation over many conversations. So how do we get the digital world to replicate in some ways, or at least I would say not replicate, I would say make it better. So I think what we're finding is the kind of consumers that, let's say, some of us are, we prefer fast, quick reaction. We want to study things ourselves. We want to compare. We want to go to sites and do all sorts of things, research, Gartner research, whatever it is, right? And there's the other consumer who wants to rely on friends, who wants to get references. So there's all sorts of different experiences. How are you going to replicate all of that without knowing the customer in the first place? So that's really the engineering of the experience in a sense, right? And then how do you engage them so they understand it's good for them? So we worked on a scheme where we've developed something which allows the customer to see what's good for them. So we call it making the customer healthier and wealthier. So if we can get them to feel that, and then as the sneaker mail example, by the way, that's a very old example in some ways, but I love the storytelling better this time, Peter, is exactly right. So a lot of things are still finished not digitally because the regulations still demand that. So if one of the things we might explore later is how we get the regulators to face up to this. Some of them did it temporarily, and some of them are doing it permanently. So that's another point of friction. So there's a consumer, but also what we get the regulator to force upon the consumer. And then how do we protect the consumer so we don't get this spamming, I think someone talked about, and irritation and all those things. So the whole end-to-end journey, really from attraction, engagement, if you like, to monetization, the whole journey needs to be rethought properly in a consumer sense. And that's really not done in most companies. So that's really, I would say that's what we're working on.
All right. Thanks, Alnur. Yeah, I mean, digitalizing the customer journey, I think that's a big, aspiration for many insurance companies. Actually, based on our research, we know that about 11%, they expect about 11% increase in digital revenue over the next 1.5, 2 years. So, Alnur, if you think you talked a little bit about already the changes in the value chain. But if you think a little bit at the role of the incumbent players, right? And we heard about, the sneaker business, right? but what can actually, what's the role of the incumbent players, the incumbent insurance players in that changing environment, changing customer expectations, higher aspirations for digital revenues, et cetera? What is your view on that?
So look, I think we have insurance companies traditionally are not consumer centric. They're more product centric, or I think the industry calls it manufacturing centric. Some are distribution centric, etc. So I think we've been on a journey anyway. So I think we'll just accelerate the consumer's friendliness, but also the sales side of the fence, right? Because the people selling also have to understand the consumer. So I guess there's two things happening. One, I think we have to lead this revolution. Otherwise, the people like Peter, etc., will fund competition, which is their job, right? But also, we don't want to go the way of other industries. So we've got to react quickly. We also have to lead in terms of regulation. We have to lead in terms of compliance, consumer protection, all these things. And we have to lead. And it's new to us. Us mean the industry. The DNA is not a consumer DNA. It needs to be changed. So I guess what we're trying to do now is get the whole. So very few, let's call it, people in the organization see the whole end-to-end journey of a customer, right? Usually it's seen as the front face, as Peter was outlining, but the whole journey people don't see. So we've got to have the whole journey treated as a sales process, if you like, including the follow-up, including the servicing, etc. Because it's all part of the sales process. All these touch points are where consumers get annoyed or get pleased or are happy, complain, and to build scale digitally is much easier if you get those right. So scaling in a sustainable way, if I was hyping it, I would say hyperscale, but just scaling is important, and you need to understand the consumer journey. So I think our role has to be central. And we have to use the best techniques from people like Yamini and so on to get this done.
Thanks, Yaldo. Peter, how do you see, the role of, not only insurance players, but, in general, incumbent players? I mean, you're investing in, as you said, in many industries, in many, different areas. What are maybe the 2 or 3 patterns that you see how the incumbent players respond to that challenge?
Listen, I think that's a good question, and I think if you compare it to 5 years ago, it's amazing to see that the change and the difference in willingness to work with startups, to work with technology, etc. How it's embraced. In fact, that even a role like Al-Noor's, like that wasn't there 5 years ago, right? Now the reality, and I'm sure Al-Noor sits on the good side of this viewpoint, is that some companies have that function, want to embrace it, and are actually willing to embrace it. And some of them talk about it a lot. Some of them don't. For example, a company outside of the insurance industry, but a company like Johnson & Johnson, I've never heard them speak about innovation, but I can mention 10, 15 companies in our portfolio that all have Johnson & Johnson as a great customer and a great partner. So they're embracing technology, startups, left, right, and center without necessarily talking about it. I see certain other companies that talk about it a lot, but when you then start to work with it, oh man, it's so hard, right? And so whenever I speak with enterprises that are keen to partner with our portfolio companies, I'm always saying that I'm super happy and I'm super glad that they want to do it. But I also ask their support. Like, these startups have very few people. The pace and the chaos, etc., is very high, and so the length of the cycles and engagement sometimes are challenging. But the other thing I think is important to realize is that, when people talk about startups and they talk about technology, they always think it's about disrupting. But the reality is there's 2 types of it, right? You can either disrupt the incumbent and fight with Prudential or other larger players, or you can actually be an enabler, right? And so if you look at what Yamini is doing, is not saying like, oh, we're gonna compete with insurers or we're gonna compete with the agents, but it's saying, can we make those agents more successful? Can we create a better experience for customers, and therefore a better sales experience and sales conversion and more business for the incumbents? And so I think it's always important to keep that in mind when you are an incumbent player. Like when you look at technology, is it disrupting me? Is it kind of like somewhat neutral, or are they actually really powerful in enabling me to get to that next level?
Excellent. Yamini, we just talked a little bit about disruption, scaling of the incumbent players. How do companies like Vymo fit into the picture, right? I mean, how do you see the relationship with the incumbent players?
Yeah. So I think somewhere disruption of uh, the industry from the customer wanting to see something different much faster in a much more transparent way probably started almost 8 to 10 years ago, right? And then it was a fight between the insurer versus probably the insurtechs, which at that point, early point, were largely about distribution and creating transparency on product offering. Again, these were simpler products where you are okay going with an insurtech probably because it's my motor insurance, car insurance, and the car breaks down this year. I know you will be around because you just raised a bunch of funding and I will die this year. But if I have to take bet on something bigger like my retirement plan or legacy or life insurance, you need to last long, much longer than me, right? And folks are way more risk averse in that and look for a completely different dimension in their assessment, right? I mean, customers. What we've seen is that the role of the incumbents actually becomes even more crucial, and great that all of this is happening because it's time now for insurers to fully unlock what truly was their value prop, to be able to give a suite of products which provides that kind of, which addresses a very varied kind of needs of the consumer, right? Now, when the pandemic struck, we saw all of this happen over a 12-month time frame, where the first 6 months were about, oh, our natural distribution is going to get disrupted, so let's jump into D2C, because if the customer is seeking something, we should be found and it should be easy to interact online with us. But very quickly, the second half of the year was also a lot about, end of the day, these are complex products and consumers are still looking for advice. And 90% of the consumers, their trusted advisor is probably an agent or their wealth manager at the bank, personal advice, financial advisor, etc. Right? Now the question became, how do you enable this face of your company to be completely educated about not just one product, but the range of your offerings, be able to evaluate the customer's needs and map these two and position your brand the right way, right? So I think somewhere 4 to 6 months into the pandemic, we saw folks doubling down on enabling the face of their company, which is the financial advisors, agents, the bank partners, etc., rather than so much on D2C itself. Now, 10 years ago, when the disruption started, there was really nothing to help the incumbents adapt to this. So a lot was built in-house. But over the last 5 to 6 years, there are companies like Vymo who have helped incumbents compete in this journey probably like 5 times faster, right? And when incumbents adopt something like Vymo or any solution, any technology out there that helps them either become D2C faster or enable their distribution teams faster, they can move way faster than any incoming insurtech competing on distribution, right? Because look at the scale. For example, insurers like Prudential, even in markets like Asia, have, Alnoor, correct me if I'm wrong, but more than 100,000 sellers on the front line, right? Relationship managers on the front line. No one can compete with that kind of scale if you crash your ability to adapt quickly to what the customer wants.
Right. Well, we heard already, and you touched a little bit on that, on the challenges, of course, also of remote selling and digital products and, different channel capabilities. This is something that, our, the relationship managers in our service are articulating quite a lot, right? On the one hand side, big appetite for digital revenue. On the other hand, hey, how do we actually do that, right? In a definitely more remote environment, right? So, if you had to give, insurers, 2 or 3 concrete advice, right, for best practices, how to establish remote sales, what kind of advice would you give the insurance players?
I think, like Alnoor mentioned, we are in the age where customer experience matters more than anything else. And everything else has to be designed to wow the customer in their moment, in the moment of truth, right? Which is the touch point. What I would say is, like any new gen technology company at this point in time believes in one thing, that you need to instrument, which means you need to measure what's happening at every single touch point. Now imagine the insurance incumbents where 95% of your business is happening through frontline third parties, and you do not have visibility into what actually is happening in that conversation, in those meetings, right? And being able to instrument that is tough because these are third parties, you don't own them, right? So how do you capture those engagement checkpoints? So the number one thing for what we've believed is you need to have this visibility irrespective of the context. It's probably one of the toughest contexts to be able to instrument that. Like in a call center, you can record every touch point, but not when it's 100,000 agents, right? So you need to solve for that, right? And the only way you'll be able to solve for that is not by trying to monitor this frontline, but being able to give value to them at that interaction point. So what are the tools you're enabling them with so they can delight their customers in that interaction, right? And if you can give them those tools and they just start using those tools, you will get the information back. How many such interactions happen, which watch type of customers, which agents are exhibiting certain behaviors that others are not, and what is helping them win. And then how can you help everyone mimic a similar set of behaviors, right? You can handle many traditional challenges with this whole distribution model, which could be about attrition, helping third parties become successful, and enabling them at the point of sale, and enabling them also to have a lifelong, like a much longer beyond the sales cycle relationship with their customers by being relevant to them even beyond the sale, right? So that we believe instrumentation and awareness of touch points is key, and the only way you'll get that is by adding value at that moment of sale, and therefore getting that information back.
All right. Alnoor, how is Prudential assessing the effectiveness of digital or remote sales in your organization?
Look, as a almost 180-year-old company, right? We got a responsibility to our customers, as Yamini highlighted before. So our workforce, our agency is more like 500,000, Yamini, but it's the same points that you were making. So we're probably going to see a bifurcation of some kind, where you got the top end of the agents who are highly motivated, really trusted advisor, a lot of knowledge about the product, about the customer, etc., what's good for them, and then you got the tail, quite a long tail of people who try and selling. So if you're trying to help our agents really make more money in their terms, motivate them, right? Some of them are motivated by really serving the customer well, but ultimately it's earning a living. How do you get a tool set that cuts across all of this? And traditionally, agents are rewarded by outcomes, right? So you make 2 sales, you make £2 or $2 or whatever it is. Whereas now we're trying to make them a professional workforce, from the trusted advisor, perhaps all the way down to a trainee, right? And how do we make sure that they're serving the customer well, but also making money? So unless you're giving them tools that help their productivity by a multiple, they won't get engaged with this. Secondly, I think you need to improve the quality of the people through training, certification programs. But again, you need to do that digitally now. People want to attend. We used to run 5,000 person in a big football stadium type of training, right? You can't do those things. So all of those things are moving online. But what we're finding is actually more productive on the whole. You can't do away without human meetings. You can't, but it works better. The third thing is a consumer sales interface. It needs to be completely re-architected. So we used to call them in software long-running transactions, and people don't understand what long-running transactions are until they meet the life insurance business, right? This can last not just minutes but years, right? How do you portray that in digital format? And there is nobody to attack that problem, right? So you can do videos like we're doing, and then what happens to them? You can store them, and then what happens to them? How do you track the emotion? Did the customer understand what you are selling? Because thankfully in 1 or 2 markets, we are forced anyway by regulation to video. So we got some experience of these things. So Jürgen, there's a whole lot of things we could talk about, but basically, if you look at the changes, it's two-sided, and try to motivate the salesperson, in this case the agent, to not only deeply understand the customer, but to use tools that help them make more money on the one hand, and the consumer to get huge transparency, ability to execute, look at things without the agent, with the agent's permission, and almost have the agent work as a micro prudential, right? So essentially getting each agent having the same tool set as, if you like, me. Not that I do any selling, to be honest, right? But it's a micro prudential. And how do you get that collection to add up to the whole of the prudential?
Right.
So there's a
Very
huge
good.
opportunity space here. But back to you.
Thank you. All right, perfect. Good stuff. Peter, I mean, let's zoom up the discussion a little bit for the last couple of minutes. If you, as an investor, I mean, you mentioned you're looking at different industries. How do you see the insurance industry evolve? What's on the horizon, you know, for the industry from your point of view?
Yeah, I think it's interesting in general. Like we like large markets. Like when Don Valentine founded Sequoia, he was known to back large markets and not necessarily create markets, but back existing large markets. And obviously, insurance is a very large market. And the reality is that in emerging markets where insurance adoption is really low, very often, you can see that as a negative, but we see that as a massive positive. And within fintech, if you look at the adoption of fintech, it often starts with first payments, and then it goes into lending, and then after that it goes into insurance and wealth. And we think a lot of emerging markets are ready for that now. Now, the other thing is, if you look within insurance, as I mentioned, in InsureTech specifically, that first wave was focused on distribution. But you know, one of the things we often say in Sequoia when we speak with organizations is that sales is almost like an arrow, right? The tip or the point of the arrow is the sales team. But then you have your success, and you have your product, and you have your engineering, and you have the founders with their vision, etc. And so the entire arrow is sales. And specifically in the context of the conversation we've had today, the entire arrow is experience, because there's touch points all across. And so fortunately, what we're now starting to see is folks who are not, like, first, as I mentioned, distribution was just, you know, taking it offline and having a website. Then you started, fortunately, people like Vymo or Turtlement in India or some others are saying like, hey, what if we can actually enable the agent more and be more of an enabler and use technology there? Then towards what you're seeing now is people are starting saying, what about product? What about use cases? What about other sources for data? So if you look at what Zongan has done, or like we're investors in a company called Koala in Indonesia and a couple of other markets in Southeast Asia that is doing microinsurance, that is doing agents, that takes a much more end-to-end approach, but is actually working with insurance to manufacture products and do part of the underwriting and support the pricing and the data collection. And so you're seeing people going deeper into the actual insurance stack rather than just distribution. And I think there's a lot of opportunities in that space as well.
All right, perfect. So let's wrap up and let's close with one sentence, one really short sentence for each of you. We'll start with Alnur again. What is your one wish, right, for the industry that the industry should tackle and address?
I think the one wish is industry would grow up and really embrace the consumer.
All right, perfect. Yamini, what is your one wish for the industry?
For the industry to look at themselves as becoming the trusted advisors for these consumers, and that will help them shift their orbit.
All right. And then finally, Peter, your one wish for the industry.
Approach from the consumer, I would say that insurance becomes, you know, easy and accessible and maybe even fun for the consumer.
All right, fun in insurance for the insurer. Well, that's a great wish. Well, thanks everybody for this great panel. Really appreciate it. It was a lot of fun, and I think we're going to return to the Master of Ceremony. Thanks a lot.
Thank you, everyone.
Thank you.